Let us see. We'll give it a couple of minutes, let it kind of auto-populate and see how many people we reach. But good morning, Nichole Guthneck. How are you doing?
Good morning, Ronnie Stern. It is great to be here on Monday.
Okay, perfect. Yeah, well, Monday, yeah. It's another Monday, yay! So we haven't, last time we spoke, well, you and I speak several times a day, every day, it seems, even on the weekends, because you and I both work all the time. Last time we spoke, it was the beginning of the end of what we were used to. It was the beginning of the how do we manage this, what's been going on, and all that great stuff. So give us an update. How's it been going for the last month?
So since we were last here, we're closer to getting back to normal, and we've seen the mortgage industry related to availability for mortgages for buyers and refinances start to calm down and flatten out. And at the end of the day, yesterday, there came out an article about 7% of loans are in forbearance, so approximately 1 million people. They expect that number to double. And as a mortgage industry, there will still be availability for borrowers that want to purchase a new home, refinance a home, or even purchase an investment property. The only mortgage products that we'll see exit our marketplace are non-qualified mortgages, which were programs for people that could qualify on alternative documentation other than tax returns or pay stubs.
Are we talking about bank statements? Sorry to cut you off. Bank statement loans, is that what we're looking at?
Yes, bank statement loans have been suspended in the near and dear future.
Ouch. What about all the loans? And we're starting to get questions already. So I'm holding on to my phone. That's why I keep on, ooh, you can't see it. That's why I keep on looking down, and I apologize for that. We're starting to get questions, and one of the first main one is, what about federal assistance loans? So I work a lot with teachers, as you know, I work a lot with teachers from the area. I work a lot with first responders and nurses and physicians, and all of those specialty loans are those still in existence?
Right now, down payment assistance and those specialty products are suspended, and we will not see them return probably for a few weeks when things get back to normal, government agencies reopen, and we can determine the availability of those funds. In addition, mortgage underwriters and the overall outlook of qualification are focusing in on those down payment assistance programs to make sure that those buyers are being set up for success and can absolutely perform and repay the mortgage. There's a fear that without any funds of the actual buyers being involved in the transaction, that they could be more likely to default during this pandemic if there was a job loss. And that is the reason that those programs have been temporarily eliminated.
So, for example, one of our mutual clients right now, she's a nurse. She's at the beginning of her career. Nurses full time at this point is 36 hours. They do, for example, she does the 3 days of 12 hours, which I could never do what they do, and I have the utmost respect and thankful for them. But how would that be looked at?
So during COVID-19, all of the agencies are coding underwriting findings and specialty guidelines where they're asking we pay special attention to all employees. As a nurse, if she's not working her 36 hours, we're going to prorate the hours and see what do we believe she'll work until she sustains back to normal. And that is an average of year-to-date earnings. There's many things going on right now. There are buyers that are furloughed. There are buyers that are laid off. There are buyers that are completely on unemployment. There are buyers that have a portion of their income taken away until we reopen. I've seen between 20 and 30% reductions. And here's what everyone needs to know. If you're in the market to purchase or refinance, talk to your loan officer, inquire with me, and let me take a look at your income and what you have going on with your personal employer to see when you'll return to normal. And right now, if we could qualify you on your existing pay, many buyers qualify even on the reduced income. Also, if you're furloughed or you're temporarily laid off, you can still look for and purchase a home if you have a return date to work. If you don't have a return date to work, I've found that I can reach out to your HR department and they'll often give you one because they're looking at their total personnel and they're also going to have employees return in phases. So don't sit back during this time and think that your dreams can't come true, that you're not going to purchase a home, that you can't sell your existing home, or that you can't refinance. Because working with a loan professional that understands what we're going through and how to navigate through it is what you need. And from our last Facebook Live, I was able to help 5 to 6 people in the community. I'd love to help more. Don't sit back and wonder what your situation will outcome to be. Feel free to reach out to me.
So I'm one of those people. I'm currently refinancing my house, and ironically, I just heard the doorbell. That would be my appraiser. So people like me that are 1099 employees, I am self-employed. I'm a you would call it a contractor, self-employed. I'm a K1, I'm a S Corp, whatever you want to call it. People like me, can they refinance right now?
You can. Self-employed people absolutely can refinance. And right now we're finding the average 15-year fixed interest rate is 2.5%. And 30-year ranges anywhere from 3.125% to 3.375, depending on your credit score. So those are 40-year record lows, and you should be partaking in those savings. You can absolutely refinance if you're self-employed. The only category of self-employed people that need to delay their closing are those that serve the public in a hair salon, a nail salon, or if you're a doctor and you can't do your practices completely elective surgeries and you're not helping any emergencies. Those are the only people that we understand in the state of Florida that they're mandated to be closed, so we know they don't have any income coming in. Otherwise, I'm sorry.
Sorry to cut you off. What would be a benefit of going as a 15-year instead of a 30-year?
So on average, if you're currently in a 30 or 25-year loan with anywhere from 24 to 29 years left, on your average loan amount in Cooper City and surrounding area, you'll save anywhere between $180,000 and $240,000 in term elimination payments. And you will build a massive amount of equity because by reducing your term by anywhere from 13 to 18 years, can you just imagine not making those principal and interest payments?
Of course. But like somebody who depends on cash flow, obviously, every circumstance needs to be taken into account. For me, I'm comfortable with a 30-year. I think a 15-year would give me a little bit of a heartache. I'm already a little OCD about my finances, so that would kind of push me over the edge. But the 15-year mortgages right now are at what percentage?
The average 15-year rate is 2.5% on a 15-year fixed, and a 30-year mortgage, you bring that up, is a wonderful product, and especially the one I find most in need, because some people want a financial plan and pay off their home and save that huge chunk of change and build equity a little quicker. But there's many more families that want to save per month. And right now is an ideal time to save several $100s per month. You also get to skip a mortgage payment, and depending on how you want to handle your escrow account, you may get money back from your current servicer as well. So saving money is often the most favorable way, and both products are great. And interesting enough, we can squeeze in 25, 20-year and 10-year terms. So
We'll
what
talk
I
about
do,
that after. Yeah.
yeah, is just contact me and I'll do a no cost analysis, no harm. I'll let you know your savings, and it could be something that helps your family right now.
Something that I find very annoying, yes, I use that A word, that I find very annoying and very uncalled for is that the current mortgage servicers don't tell people what happens when you go into forbearance. And I think that another lender that I know said it correctly. They're using an analogy of forbearance that says in 2008 happened and we tried to pick up and react to it. And now we're planning but servicers are not necessarily giving all the information. So what we found out for a few of our clients is that they took forbearance, and one of our best friends, she was looking into forbearance, and when they were looking into forbearance, they didn't understand that actually does impact you. You cannot, there's a lot of things you're not going to be able to do once you take that forbearance. And 90% of the companies, the ones I've done research into, and you and I have spoken about this, be it Mr. Cooper, be it Chase, be it TD Bank, be it, I have my list, Wells Fargo, be it anybody, any of the banks and any of the servicers, what they're doing is actually ballooning this. They're taking your 90 days that they're giving you off, and they're saying on day 91, let's say your payment is $2,000 a month. On day 91, that $6,000 is due. You do not have a choice. So can you tell us a little bit about the impacts of forbearance that you're seeing?
So I've had a few clients that wanted to refinance their existing home, weren't necessarily in need of the forbearance or were interested in purchasing, and they did not understand at all what they even signed up for. They just thought, oh, something was available. I don't have to pay my mortgage for 3 months. Why wouldn't I partake in that?
Right.
And sadly enough, it's completely very upsetting to me what I find going on with the servicers right now. I believe the pandemic onset so quickly and the government pursued them to make accommodations for the American people. And that accommodation that they made was so quickly thought out, and they're not properly disclosing or informing in most cases or making sure that the consumer understands. A forbearance does not eliminate your payments. A forbearance is not a derogatory remark on your credit report that you've paid your payment late, but in 90 days, in most cases, and yes, you have your list, only a few are opting to allow those 90 days to be put on the back of your loan, which means that if you owed another 18 years, that you'll owe 18 years, 3 months, and they're extending your term.
I haven't found one to do that yet. For all the ones that I've called, I have not found one to do that.
I have heard that there's potentially one or two. Maybe next Monday I'll find out who they are, but you are 100% accurate that the big and profound companies, the Bank of America, the Mr. Cooper, the Wells Fargo, the TD Bank,
Chase, yeah,
they're without disparaging anyone, they're not helping you. Because if your situation is that you can't pay your mortgage now, you're obviously in a situation where your income's been impacted. Well, let me ask you, on day 91, how are you going to back pay 3 payments? What was that benefit to you? So you really have to be careful, because potentially, Ronnie, you are correct. This could be a repeat of 2008, where many people had to enter loan modifications, short sales, and lose their homes. So I encourage you to reach out to a real estate professional or a loan officer if you have questions related to your current mortgage, or potentially maybe the answer isn't forbearance. Maybe the answer is getting you into a property that you may better afford. And don't let anyone say that houses are not selling and buyers are not buying, because they're going quickly when they get on the market. And I think the real thing that I leave you with is the forbearance is not necessarily the proper Band-Aid, and you could be entering into something you can't get out of by spiraling into this agreement. And I encourage you, if you are in forbearance now, it's not too late to reach out to Ronnie or myself. And if you're considering it, it's not too late. Get real professional advice and understand the consequences and the events of that forbearance.
So you brought up something spiraling, and there's a lot of people that are not aware of, and they're going to try to refinance and they're going to try to do certain things, and they're not aware of certain things that do spiral. My client Peter and other people that I know have taken what's called a PACE loan. The PACE loan is an improvement, is a green improvement, be it your roof, be it your windows, be it your doors, be it anything, you've done improvement and you got a loan from the state. And it's not really, first of all, the percentages, I'm anti-PACE. I'm sorry, it sounds like I'm on a rant, but I am. I think the percentages, the cost, the closing costs, everything that they take from you doesn't even, and then they tell you that this is something you can transfer to your buyer. That is a lie. You cannot give, in my opinion, my personal opinion, don't let that be anybody else's opinion, but that is a very much a lie, because you cannot add to somebody's debt to income ratio. So if you're turning around and you have you have a certain amount, there's $20,000 worth of windows that you put in and the payoff is 25, you cannot add that to your buyer. But the reason why I'm on a rant is because you cannot refinance 90% of the time. There's some little circumstances is that if you have a PACE on your house, you cannot refinance your house. They will not give up that money that they have coming to them, and they will not let you out of, unless you pay off your debt, they will not let you out. So here, Nichole, you can talk about it a little bit more.
So I've encountered many customers in your area, and they've signed up for a PACE, and they've done efficient improvements or hurricane impact windows or wonderful things to their home that they think is just some small or larger monthly payment, and can I refinance? And Nichole, they say, I did these improvements and I added it to my property taxes because of the way in which PACE presents the loan program. And unfortunately, they do not subordinate. And what that word means is they will not allow you to refinance your first mortgage for them to remain in second lien position. And therefore, it eliminates your opportunity to partake in a lower interest rate, to take cash out of your home, to refinance your rate or your term. And that is a huge detriment, and I will guarantee you that if many of you knew that was the case, if you are in that loan, you would not have taken it. Who would sign a loan for some energy efficient improvements that will disable you from partaking in any future market event, taking cash out of your property, or using your only financial tool, the biggest one you'll have in your life, your home? And so most of the time, when a customer comes to find this out, which is often when attempting to refinance, we will contact them, request a payoff, and we will pay them off with the proceeds of a new mortgage. And that's considered cash out of your home because it's not considered purchase money, and you can eliminate the detriment of having it. But I encourage everyone out there, if you're currently in that, you can contact me. If you're not in that, before you decide, please contact Ronnie or myself so we can let you know what you're really signing and what you're really signing up for.
I'm sure we'll get some ricochet on this, and people will be, oh, well, I want to do this improvement and I can't afford it. That is my personal view. I've seen it time and time again, kind of mess with my clients and mess with the amount of money that they get at the end of the day. The PACE program has a for at least Renew, has a very high closing cost. They take at least almost a point and a quarter from your original value. So it's it's very sad. I mean, we just had a closing a month ago that the people weren't ready. They didn't know, they didn't understand. And the way that the salespeople are putting it is not the correct way. I really, really encourage people to do your due diligence when it comes to the PACE program. But on that note, a lot of things are happening, except that, obviously I'm refinancing. I've mentioned that a few times. I'm actually very, very lucky to refinance at the number that I was locked in, and the terms that I was locked in. Everybody has different terms, and everybody has different things that happen according to their debt, according to their debt, according to their credit, according to everything that's going on around them. But I wanted to talk also about new purchases. I am a huge supporter of, if somebody's ready, but I want to keep to CDC rules. So we have been showing homes, as you know, and we have been out every day. We put a listing on the market a couple of weeks ago. Within 24 hours, we did pre-marketing, we marketed it, and within 24 hours, the property is gone. It's under contract, it appraised, we're very happy. Sellers are happy, everybody's happy. That's the way to go. And then we put another property on the market yesterday. We're not showing it for a little bit, but we did another one here in Flamingo Gardens in Cooper City. So, but what I wanted to inquire is, except the people that I obviously am working with, be it my nurse, be it, the teachers that I'm working with and other people, how are you seeing new requests for mortgages?
So of the last 2 weeks, there has been an increase. And I think initially the public was not really sure what COVID-19 would bring to our country, our real estate markets, their availability to purchase or even sell their own home. And those fears are starting to diminish because they realize that life will go on and we will adapt as a society to the risks that COVID-19 present and overcome them. And I want to let everybody know we will. We absolutely will. Now, as far as real estate goes, I'm finding that any property that's released to the market is selling anywhere between 3 to 5 days, depending on the price grid. I'm not talking about $1 million homes plus or the more upscale properties. I'm talking about the median price range in your area. And you have an opportunity to get in on that, because there's no reason we have a whole industry is able to show you that home, whether you want to see it virtually or protected under COVID-19 with gloves, mask, and proper protection to not expose the seller or you. Mortgages are completely funding. There's no delays whatsoever. We have COVID-19 safe closings where you can also close on your property safely. So I encourage you that if you were considering buying a home, get out there, because there's some wonderful opportunities presenting itself, and sellers are still going forward with selling their homes, and new inventory is being released, but it's not there for long. They are in demand and they are selling. And I'm finding that there's tons of people that still qualify. And I want to stress that. Don't let fear overcome you and your current situation define you as a forever situation. You may have a perception that you can't buy a home, and that perception may not be reality. And so before you adapt that as being your situation, reach out to a professional. And I want to add one more thing. Maybe your credit isn't perfect right now. Maybe there's some improvements that need to be made, but that doesn't mean that you're not 60, 90, or 120 days away from being where you need to be. I personally work with consumers to get your credit to where it needs to be. Your credit score is also not a permanent situation. And there's no reason to sit back and not own a home if that's your goal and desire. So please, again, don't make any perception that you have a reality. And do not, this is what I'm so passionate about, do not listen to the local person, the friend, the neighbor, the nosy, whomever. You can't buy a home. You'll never qualify. My friend told you this. My friend told me that. Call and find out for yourself. Every situation is different, and there is a loan product for every situation. Again, I just encourage you to not believe what you've heard or what you're self-diagnosing yourself with. And the market is still doing great. Property value is not depreciating. And my favorite part, interest rates are so low that this time this year, you're qualifying for more home than this time last year because interest rates are about 1 percentage point lower, which gets you a lot more home. And that's exciting.
Sorry to cut you off. I just want to give some data because you know me, I need to work on statistics. I do a market watch from yesterday, from the last 24 hours. There are 69 new listings. There are 46 back on the market. Out of those, only 10 are back on the market due to something that was under contract. The rest were ones that were just parked there and, you know, waiting for the next, for what's going on. You know, people were trying to fill that out. Price, there was 5 price increases. There were 10 price decreases. You know, there are, in the last 24 hours, the status of 85 properties that were on the market went pending, backup contract or pending. So, I mean, the market's still alive. The market is still there. Everybody is doing their thing, obviously, but while making sure that, you know, you keep, they keep the right stuff for them. You know, I can encourage from here until tomorrow, because just such as you, for people to go ahead and come out and give me a call and everything else. But at the end of the day, it's your feeling. You got to be comfortable. You got to be comfortable, guys. You know, I don't sleep and I answer my phone. One of the people that's watching actually just texted me and said, how come you're not asleep? We talked at 2 a.m. But I'm constantly checking my messages and everything else. I do not have a voicemail because I just don't like voicemails, but you can always reach out to me. You can always come and ask me questions. I'm here. If I don't know the answers, Nichole will know the answers. Ironically, Nichole, our appraiser, is here.
Oh, yes.
Well, there
Sorry.
you go.
I'm in the picture. I'm sorry. So anyway, you know, like we said before, refinances are going on and everything is still going. So, you know, anything else you wanted to add, Nichole, as far as the market status?
If anyone has any questions, I know you're in control, read away to them, but the market's great, rates are great. Use this time to get yourself financially healthy, whether that be analysis of your own mortgage or what opportunities exist for you in what is your buying power to buy a new home. And perhaps it's not either two of those, but you need to talk to Ronnie or I on some professional level about a matter we can help. Reach out to us. And if it's something outside of our expertise or an area we don't cover, we work with so many great professionals. We'll get you in touch with someone. We're here to help everyone. This is a time where we're coming together and we will not leave your side. So if you're watching and there's something you need help on, you know, for me, whatever it is, I know someone or someone that knows someone, and I promise you that we can help. And I want to make sure that we experience that positive vibe every time we're on this live, because I know somebody out there needs help today on something.
Yeah, absolutely. So guys, honestly, I keep on getting messages and stuff, and this is stuff that I will go over. So sorry, somebody just made me laugh. This is stuff we went over a little bit earlier, but still, is the market alive? Yes. Can we help? Yes. Do you want our help? That's up to you. You know, between everything, we are still keeping to COVID-19 CDC rules. We are still keeping to everything else. You guys can check out our information on Broward Homes by Ronnie B. Starin, and kind of see what's happening in the market. I keep on updating all the time. And let's hold on. We have another question. She would like to buy a home right now. However, she's nervous that her current property may not sell for months. Are we back and forth on buy first and sell first? Okay, that's something that I can address real quick. Tara, hi. So the situation is that you always can do contingency. Sorry, Nicole's husband just texted me and it threw me off. I apologize, everybody. So Plantation still sells. The whole area sells, and there isn't a situation in which something is not looked at. You can do a sale based on a contingency, but my first recommendation is obviously reach out to a lender, reach out to Nichole or whoever you're comfortable with, and ask them and see what you actually qualify for, and do you have to sell in order to buy. That is the first thing I always say. I'm sure Nichole will agree with me. The other situation that I always say is that, let us come and assess the situation, Tara. I mean, we can come, check it out, explain exactly. We did a virtual listing appointment the other day. I don't know if you saw my comments on that, but we did a virtual listing appointment. And on that virtual listing appointment, we went over everything. The guy took the camera and went over everything because he wasn't comfortable with anybody coming to his house, but he did want to list it. So there's a coming soon for Pembroke Pines, but we can come to your house, Tara. We can come assess the situation. We come, with masks and all, and we try to have our conversations more outside than inside. And then we can do a Zoom presentation as well, that in which we explain what the process is and everything else. Nichole, am I right in saying call first and find out what you can actually afford, and then go from there?
Absolutely. And I can work with you over the phone. I can work with you by an individual Zoom meeting, or I can work with you completely automated, and you can have an online experience without leaving your safe environment.
Okay. If you are already approved with your current mortgage, there's ways around it. Tara, let's talk. Let's have a chat, you and I, because it's very different. Every case is a little bit different on its own. So give me a call when you get a moment. My number is 305-942-7446. And let's see how we can help you, no matter what. It doesn't, it's never going to hurt. But what we were saying, sorry, thank you, Sean. What we were saying is that, it doesn't ever hurt to ask. I'm available at 305-942-7446. Nichole and I talk all the time. If I can't help you and she can help you, that works. Nichole's phone number, just in case if you're needing to ask questions and all that great stuff, is 732-814-6249. Even though it is a 732 number, Nichole is right here in South Florida. I can attest for that, being that she sends photos and they're in the pool here in South Florida. She's not in Jersey.
I never changed that number. I've had it for 25 years, so it ages me. But I'm right here in Southeast Florida, and I assure you, you're not calling the North. And
right.
Call me anytime. I'm here to help. Call, text. And Ronnie, I appreciate you for inviting me on, and my commitment is to continue to help you all, inform you all, and be here for you all.
Perfect. Well, I thank everybody for checking in with us. We had quite a few people, and we had some questions. Most questions came to us personally. You can continue asking the questions, and you can continue, letting me, I'll continue to try to keep you informed as much as possible. If I don't know the answers, I will get you somebody who does. But no matter what, keep safe, keep vigilant. have fun. If you're on Cooper City Buzz, our local Facebook group, enjoy your Cooper City Buzz deal for today. Look for the rest of them. Cooper City Buzz is here on Facebook. It's a great little group that has a lot of resources. Anyway, 7,000 people later. Thank you, Nichole. Thank you for your time, and I will speak to you soon.
Thank you all. Have a great day.
Bye.
Bye.